I'm Ava Makinar, and this is the Coin Daily. Stocks keep grinding higher. SPY and QQQ just closed a shade positive. Volatility is falling, and most risk signals are green across traditional markets. But crypto hasn't followed. After last week's attempt at a breakout, price has rolled right back into the same range, volatility is still squeezed, and the big moves have evaporated even as stocks keep climbing. That's not just random noise. It points to a reset that's all about crypto's own appetite for risk, not a global risk-off. So tonight we're focused on whether this is just a breather after the breakout, or something more serious building underneath. Everything hinges on how the tape absorbs stress, and whether positions can hold up as the market resets. Crypto risk isn't only about charts. Sometimes it's personal, about the people and the platforms at the center of the system. Exchange trust, or the lack of it, still moves this market faster than any macro driver. The Binance and FTX saga is a sharp reminder of how quickly risk can flip. Binance founder Changpeng Zhao is offering a behind-the-scenes look at the last few days before FTX collapsed, and his version reframes those dramatic hours. According to his new memoir, Zhao says he never truly intended to buy FTX. That public rescue announcement in November 2022. He says it was just a way to open up FTX's books, not a serious effort to bail out a rival. The timeline is established. On November 6th, Zhao tweeted about selling off Binance's FTT tokens after what he called recent revelations. 2 days later, Binance announced a non-binding agreement to acquire FTX, but quickly walked away, citing worries over customer funds and regulatory exposure. FTX was bankrupt within 48 hours. Zhao also claims that Sam Bankman-Fried, FTX's founder, asked him directly for a couple of $2 billion before the deal collapsed. Since then, court records and bankruptcy testimony have filled in the gaps. Showing FTX's customer assets were abused, money was funneled to Alameda, and the balance sheet was a wreck. Zhao's new book adds color, but it doesn't change the facts. Binance never completed a rescue, and FTX was simply too far gone by the time any deal was considered. The lesson is how quickly perception, and with it market trust, can vanish, even faster than price ever moves. So beneath all the volatility, it's the infrastructure and the leadership that determine how much conviction traders can have. As trust cycles ebb and flow in crypto, the engines under the hood, the networks and teams, matter more than ever. And that's also where the story shifts from collapse to new construction. Polymarket just closed its acquisition of Brahma, an infrastructure specialist whose team has processed over $1 billion in transactions. The deal isn't about adding wild new bets to the platform. It's about plugging in automation and execution tech to make Polymarket work faster and more reliably on-chain. With the integration, every Brahma product gets shuttered in the next month, and all their engineering talent goes directly toward improving Polymarket's core systems. For regular users, it may take time before you notice any difference. But in the background, this is about setting up for bigger demand and fewer outages whenever prediction markets spike, especially with an election year heating up. What we don't know yet is how much Polymarket paid, or exactly how quickly this overhaul will materialize in the product itself. What is clear? In a year when prediction markets are becoming mainstream talking points, reliability and scale are the next battleground. Less about the flashy bets and more about whether the pipes under the hood hold up in a flood. This acquisition shows that the real race is now in the back end, not just the user experience. Corporate depth is shaping each cycle in crypto. But away from the headlines, the price actions and positioning are drawing the sharpest lines. That's where the story goes back to cross-asset moves, and why crypto's reset stands out against traditional risk assets tonight. Traditional risk names like the S&P and Nasdaq both finished just a touch higher, with volatility staying soft. Crypto, though, lost momentum after last week's failed breakout. Bitcoin briefly pumped near 71,900 but couldn't hold it, and Ethereum did the same bounce and fade. Instead of clear trends, we got larger swings that fizzled fast, leaving the majors right back in their established ranges. What does that say about risk appetite on the crypto tape now? The dashboard can lay out the state of play. Participation, stress, and leverage are all moving parts tonight. Here's the cross-asset picture. Stocks are firm, but crypto has rolled over. On this dashboard, stress is about 57%, breadth is thin, and funding is positive. Liquidations are modest. That mix reads like a crypto reset after leverage rebuilt, not broad macro panic. That setup tells us this is not a macro-led de-risking. Risk looks fine outside of crypto, but flows and positioning within crypto are thinner. Bitcoin and Ethereum both saw open interest climb. Over $6.5 billion for Bitcoin, $5.4 billion for Ethereum. Yet price didn't follow through. Instead, we saw the breakout exhaust itself and then snap right back. So the first real watch is whether Bitcoin can hold above 71,900 or if Ether can push through 2261. These levels are simple, but the message is pointed. Unless something changes internally, this is a reset for crypto rather than a broader risk-off. And when you look closer at the big names, the setup comes into sharper focus with the way positioning, price structure, and liquidations are playing out in real time. That cross-asset gap sets a clear test, but the main bellwether is still Bitcoin. It just fought its way back above a major reclaimed band and forced bears to scramble. So is this break a signal for trend? Or just another squeeze within the range? Bitcoin just reclaimed that 71,900 band, a zone that's been the key battleground between bulls and bears. Last week we watched failed breakout attempts. Now, with the short thesis flipped, the debate is whether this move above the band is new trend or just squeezing shorts after a recent stress burst. The price chart spells out exactly where that action is clustered. Let's break down the battleground first. Now, to Bitcoin. Was that a clean reclaim or just another squeeze? Bitcoin is holding the higher range, support near 67,843 and resistance around 72,000. Price is back in the upper band, but it's still a prove-it zone. For traders, this reclaim is basically three numbers. Key resistance is around 71,777. A clean break puts 72,015 in play. But slip under the hold line near 71,301, and the reclaim starts to fail. Open interest is up nearly 7% over the last day. Funding is at 5.7% annualized, and leverage remains elevated. Shorts that bet against this reclaim just took losses, with the gauge showing strong readings across all positioning metrics. That bounce is powered by short liquidations. Basically, bearish traders getting forced out. But that means it's not automatically a trend reversal. Bitcoin holding above the 71,900 to 72,000 area, without another round of forced liquidations, is now the signal to watch. If price can stay above that band, with open interest climbing and funding rates stable, we get evidence of actual buying, not just a squeeze. If it can't, the move gets unwound just as quickly as it ran, and we stay boxed into the old range. It's a critical moment, because just last week market stress hit a 90+ percentile spike before cooling. That volatility cluster still hangs in the background. If another rush for the exits happens, the 71.9K area becomes invalidated once again. For now, though, the market looks tense, but not fractured. The complexity only grows when you look across to Ethereum, where a similar reclaim is underway, but with more leverage and seller pressure overhead. So Bitcoin sits on an edge, squeeze or trend. Ethereum is tracing the same path, but the dynamics under the surface are even trickier. Fresh leverage, heavier overhead sellers, and a volatile crowd jockeying for position. Ethereum just retook the 2249 to 2253 zone, invalidating an earlier bearish setup, but it's running straight into sellers clustered overhead. Each attempt to push up is getting sold into near the resistance at 2258. The surge in open interest makes this move even sharper. Leverage is jumping here faster than anywhere in majors. Before we dig into the participation, let's get a clear sense of where the price structure is right now on the chart. Now to Ethereum, also back in range, but with a different leverage profile. Ethereum reclaimed the mid-2200s, then ran into sellers near 2258. It's still range trade, but it's at the top of the box, where rejection can travel fast. Here are the levels that matter for that reclaim or reject call. Key resistance sits around 2240. A break opens a run toward about 2258, but lose roughly 2203 and the reclaim starts to fail. That's also when rising leverage tends to flip from helpful momentum into forced selling. Open interest is up more than 19% in the last day to about $5.4 billion. Funding is running above 4% annualized. The price hasn't broken the range, but leverage is stacked up under the surface. Here's the dynamic. Price is clearing out failed shorts underneath, but every rally to the highs finds rapid selling. If Ethereum holds above 2261 while participation persists, we get a shot at a cleaner trend. But with leverage this high and price still stuck, the risk of another sharp step back is real. Sellers could seize that moment if the rally can't clear resistance for long. The article points out we've already seen over $11 million in liquidations, with short sellers on the wrong side of the last move, but it's still not translating into fresh highs. The regime hasn't switched. Instead, Ethereum is boxed between a reclaimed lower band and a heavily sold upper boundary. This isn't just noise. It's the clearest picture yet of a market running hot on leverage but undecided on trend. If that flips, the move could domino elsewhere in crypto, but for now, the tight range holds, and attention turns to the altcoin setups building similar pressure. So, as the majors test their ranges with leverage surging, the cleanest squeeze setup tonight actually belongs to AAVE. Both its price and positioning are primed for a trigger. What happens next could set the tone for altcoins as volatility builds. AAVE just reset right up to its trigger level, $96, after a strong rebound. That pushes it to the very edge of its 2-week range. At this point, it's not about whether we get a squeeze, but whether AAVE can climb above and hold this level for a breakout, or gets knocked back down for a return to consolidation. Before we look at funding and positioning, let's frame the setup on the price chart first. One token to watch if this turns into a squeeze and unwind tape. AAVE. AAVE is coiling in a range, with support around 86.10 and the top end near 97.80. The decision is around 96. Accept above it, or reject and snap back into the range. Zooming in, the current price is about 95.58. Nearby resistance is around 95.64, and if you can press through that, the next incremental break target is roughly 95.71. The near-term hold line is about 95.50. Lose it, and the push higher is probably failing. And that's why the next chart matters. It tells you whether traders are already leaning into this move or still underpositioned. On positioning, the fuel is still there. Funding is about 11% annualized, and open interest is roughly $40.7 million. So if price breaks higher, there's plenty of crowded risk to squeeze. But if it fails, the same leverage can accelerate the drop. AAVE's setup now comes down to one simple question. Can it finally clear and hold above 96, or does it stall again? If it pushes through and funding plus open interest stay strong without a rush of liquidations, the top of the range near 98 could unlock as the new high. But if the rally fizzles while traders keep paying elevated funding, it opens the door to a squeeze the other way, possibly dropping back towards support at 86. The article notes, this is the cleanest tension in altcoins tonight. All the ingredients are present, but confirmation will only come if participation holds as price pushes. Think of this as the pressure valve for the whole altcoin tape. If it's released, volatility expands fast. If not, traders step back. As the majors settle their ranges, this is the next watch for real directional clues. So as crypto settles back into its range with stocks still firm, the next moves are all about confirming or rejecting this reset. The big question for the next 24 hours is whether these setups, Bitcoin, Ethereum, and AAVE in particular, can hold their reclaimed levels as positioning heats up, or whether sellers step back in for another shakeout. AAVE is the canary right now. If the squeeze resolves, volatility could spike across altcoins and majors. For now, the tape says this is a targeted unwind rather than a full retreat. But that can turn fast if conviction doesn't return at these key price bands. Does this range-bound reset across crypto make you more cautious, or do you see it as new fuel for the next breakout? Subscribe and you'll get this every evening, plus shorts throughout the day whenever something moves.